Welcome to TradeTheNBI.com. This is John. This report is for the 9th of November. And again, we're just treading water at this particular point. We've seen the little bit of softness that came through once we had the steel cross below. It hasn't resulted in any real selling because we had such a significant amount of short interest that had been pretty much wiped out and well below the red line. So anytime we have the cyan below the red line, unless you get the steel crossing below it, briefly creates usually the potential for a little bit of weakness, but then you look for the cyan breaking above the green and red on the DOC here, or a spike of that orange. And we didn't get that, but we also didn't get a reset of the orange coming down below, which really would have given us the impetus like we had before back over here, which indicates strong upside potential. That we're still continuing with a soft increase of the shakeout is all positive, and we're just humming along. I mean, I said it would take a little while, but once we get towards this level, that the push towards 2,600 was definitely going to be there. There's just nothing that's putting a roadblock to that, except for the dramatic rise in oil prices, which could have a future impact, not so much on the immediate side of things. See, again, with the NQ, much stronger shakeout readings as it's actually broken up above its previous range, unlike the ES, and still with the red, now all the way up at the 7.5. It gets into the danger area at this levels. But you do have a steel reset, which means that you have got the potential for short-term buyers to turn it around. I know that we've had fund money come in already for the month, and that's sort of kept things in a stasis with that slight up move, and we're still maintaining ourselves just outside the top band of the dollar range to euro. As long as the euro is above that 115.5 range, it's pretty comfortable that the S&P doesn't have any contraction issues with it. You have to see a significant drop into this mid-range before that would have an impact, because this is just bolstering earnings for S&P in particular. The crazy run for treasuries here doesn't look like it's about to stop yet. I mean, even though you have the rising little bit of a short move here, it's just a defense move. It's a strange place to be putting their money into nothing, but hey, that's all right. And oil getting to its peak here. We finally jumped. I mean, geez, look at that with the TOC red all the way at the plus 13.5. That's crazy time. And now you see the, well, let's see, this is a good example of it here. The spider of the steel breaking back down below, and at the same time orange popping up. I would expect to see a little bit more of a pullback. A lot of positive extremes. This whole run has been a positive. And that just is an indication that, it's reactionary. But that is the nature of markets. I mean, it pushes out, the algos pressed it, people bought into it, and then when it fades back, it'll reach equilibrium and do it all over again. Gold, again, like we talked about, just didn't have enough of an impetus. Now it is slightly increased in the spread here. If we break into a new range, that could be enough to lift us up towards the peaks. It's not until we break past this upper zone here around the 124 range that you're really going to see anything take off. But it's just been a slow, it's almost a positive shakeout. Turning to the sharp contrast 5K, you can see ended up with a little dip, and then we ended up with several little range breakers. It really wasn't until we got above the 50% range that we saw some decent moves with the orange below the red DOC here, and those are the ones that actually led to the momentum move. And then, of course, it turned around on the breakout above, and then the subsequent collapse. So in that beautiful chart with the 5K, though, you get this really excellent rising of the Fibonacci line here as it goes to the peak. But then I always look for that DOC spread where you get the cyan crosses above the red DOC, at the same time green crosses below. Throw in the orange above 13.5 and you get that nice dramatic swift decline. It's usually pretty fast. Didn't make it even below the 23%, which is interesting. You would look for to head towards that zero marker, but it just shows the resilience that we're seeing right now. And particularly, we're literally, if you just go straight across this 50% line here, right around the 2588, it's sort of just like the above and below line where we've traded partially below it, part above it, and it's just an accumulation within that general range. And so what we have to look forward to see is who overbalances who, and we'll see that in the DOC on the daily and that as well as intraday on how much rise we get out of the Cyan short interest and whether it breaks above and creates a daily version of a DOC spread. You know, because a lot of times you get this going across a little bit back and forth. It's just the dramatic move that has the correspondence to it that is really what we look for, and that creates a little bit more significant move. So that's the key at this particular point. I think we're just going to get into some more chop, and I still think that we're still better shot at 26 than we are at 2550. That is the way it looks at this particular point. As always, though, trade well. We'll talk again later.